All right, welcome in, everybody. Hope you're having a great day. It is Wednesday, and I was just entering on my Greeks while we were listening to the great man, Black Hawk. So let's see how much buying power we're using in the old IRA today. 12,327. Things go up when the market goes down, y'all. You can look at your Greeks and buying power and know what's going on. 12,327. We're using 12% of our buying power. So the market is down over 1%. Well, how are we doing on our net leg? Ta-da! We're down $45. Wham! Cry me a river, baby. Isn't that great? Market down, we're down pennies. So if we were totally invested in the SP 500 and just owned SPY for our entire account, we'd be down over $1,000 today. But because you and I are, portfolio managers, we're kind of doing really good. So let's look how we did in the other account. We're down $51. Wham. Okay, good. So go to our Greeks and ratios. So in the smaller account, we have deltas of 22, and that's, you should know that the market went down, right? Market goes down, our deltas get larger. Market goes down, and against our positions, our theta increases. Our theta percentage went up, so that's fine. So do I trade? Are my deltas okay? Well, first of all, am I living? Yes. Am I fogging the mirror? Yes. Am I in prison? No. Okay. Is the market open? Yes. All right. Remember, answer the question. Are my delta's too big? 2213, they could be 40. No. Okay, then go to the next thing. How's my theta? Is it over 0.5%? No. So that means trade. How about my buying power? Is it 25%? I can be at a maximum of 30, right? Because, or 35%, because the delta's or the VIX is between 20 and 30. So I could be 35%. We're 25%, people. So what does this tell me? Trade, baby, trade. All right. So let's look at the other account, the IRA. And the IRA looks good too, right? Our delta's 29.25. They could be as high as 150. So that says trade. Our theta is low. It's not more than 0.5. So that means trade. And then our buying power is 12% when it could be 35%. Everything is saying trade. All right, so let's trade. So let's go here to the account. Let's put our little trade on really quick. Look at our big green. That ain't a big green mustard. Look at our whale. It's been a while since we've looked at our whale, right? And this is Theo, is today, right? Theo today is like, well, here's where the market is. Green, all the way down to here. I like it a lot. But at expiration, look what happens. Something magical. And we get this big old profit hump to the downside. It's just gorgeous. As you get on these trades and you get your whole little thing on, and then you're never afraid to put on trades. So let's put on trade. Go to the table. Where do we go? Closest to 60 days without going over. Bobby, does that mean the 65 days? No, it means the 44 days. Why? Because this is 65. Now you say, well, wait a minute, Bobby, you got a little dot there. Yeah, I have a position in 65 days. Why? Because I couldn't find the correct strikes in 44 days. So did I break my rule? Yes, but it's an exception. If I don't want to overlap strikes, I can go give myself an exception to go above 60 days, which I did. So let's see if we can do this. Long put vertical, 50 wide. God, will somebody shut those dogs up? Let's make it 50 wide. 50 wide. We're going to move that down to where we can get it for, we'll get it down to $10. Now look at this, y'all. It's like a landmine here. So how are we going to navigate this? I don't know. Let's move this one down here. We don't have anything at 4060. So that means that 4060, 4110, right? Is 1050. Now, you notice, I got a spot here, but that's probably going to take it well below $10. So I think what I'm going to do is I'm going to go around this 1050 here. What? Hold on a second. What? Best either yelling at me or the dog. All right, so 40, 60, 41, 10. That seems like it's going to be our 50 wide. 10, 20, 30, 40, 50. I can't do math in my head. So that's at 1050. So let's go up to 1075. So we'll know we'll get filled, right? So let's get filled on that. Beautiful. Now we got to pay for that. Now it's a big down day, so I'm more likely to do a 111 on a down day, right? Because why? Because the market's down pretty good size, so I can go in here and do one of these 111s for about, let's move it up to the mid price. 21.25. Let's see if we can get that one figured. 21.25. Come on, baby. Okay, that's fine. We'll penny it down, make it less advantageous. $21. Don't look like that'll get filled either. Let's try it. Nothing. Nothing. Let's try it again. We'll work it down. Place order. Go down to 20.75. So if we filled there. Nothing. Jack squat crap. Nothing. Unbelievable. What's happening to the market? The market's moving against me. So we got filled for 20.75. But beautiful, isn't it? All right. So now what do we do? Now let's go do it in the other thing. So let's do it in the other count. So here we go. Field. There's our little stripes. The 111. So if you've never put on one of these before, today's your day. Today's a great day to put one on. Market down 1%. I mean, yeah, but Bobby, what if the market goes down 5 more percent? Well, what if the market goes up 5%? You don't know. All you can do is trade what's in front of you. Well, I'm gonna wait until I hear from the Fed. What is wrong? What's wrong with y'all? Put the trade on, monkey. Hit it, monkey. Look at this. The market's reversing, y'all. It's reversing at a pivot point. Look at this. 5,800. What was it, like 2,000 yesterday? Look at our volume here. Volume on the 2-minute chart is really moving up, which is really cool. AD negative 362 has been as low as negative 428. AD is popping up. Time to go long, baby. Here's the overnight low. Here's the opening 15-minute range. Here's VWAP. Here's cash open. And, smooth sailing away, baby. I like it. Let's look at our volume profile. Look at this, y'all. We went from oversold to overbought, and overbought indicates that we're going down into this area. And we always look at the point of control, the red line, where the most volume has traded over the last 10 days, which is close to our 50% line as well. So this is overbought. We believe overbought leads to fair value down here. This is where we think that we're going. Remember yesterday I said, you know what, we're oversold for the fair market. I said, but look at all these gaps in here. Look at our point of control. So to me, it was more neutral to bearish than it was bullish. So indeed, we have now gapped down. This looks like a gap and go. What I mean by gap and go, I mean, this is probably a downtrend day, right? Which happens 20% of the time. So that would lead you to believe, well, Bobby, if it's a trend day, that means we're going to go down farther. Yeah, perhaps, and then you're going to do your trade at 1% down, and you're going to be so mad because you should have waited to 2%. But you don't know that. We don't know. Don't wait, monkey. What does your trading rule say? Does your trading rule say, hey, I'm going to trade with Bobby every day during this session? Does it say I'm going to trade at 3:30 in the afternoon? What does your trading plan say? If you don't have a written trading plan, develop a written trading plan that tells you so that you don't have to think about these things. Don't think it. Don't overthink it. So we're going to do our trade. All right, let's look first of all at our linear regression. Look what served as resistance. Resistance was the 200-day moving average. So the 200-day moving average served as a resistance. We banged our little head against it and it said, oh, time to come back down. That doesn't mean we're not going to go above it. Doesn't mean we're not going to close above it. But for today, we are back to going with the trend. Where's the trend? Trend is down. We believe we have much farther down to go. Well, why would you put a trade on today, Bob? Because I don't know. This is just junk. This is noise. This is just stuff that we like to speculate and pontificate and figure out what's going on, but we don't know. So we trade what's in front of us, and what's in front of us right now is a really good opportunity on a day that's down over 1%. So let's go to the let's go to the Crimson account first. And let's go over here and trade and put on the same trade, right? This is not rocket science. Can you hit the button? Can you tap a button? That's what it is. So we're going to the 44-day, and we're going to sell the 38.40. 38.40. Come here, little darling. 38.40. Where you at? Seems close to the money, doesn't it? What's Bobby doing taking all this unnecessary risk? So we're going to sell the 38.40, buy the 41.10, 40.60 spread. 41.10, right there. 40.60 spread. Hold that control key down. 10 1/4. We probably won't get filled there. We're going to take it down to $10. $609 in buying power. Wham. There we go. Ta-da! Now let's go to the other account. First of all, let's we're going to create a duplicate order, right? And then what I'm going to do is in the IRA, we normally do 2 tranches. I've been doing 1 tranches because we've had nothing but up days, right? We've had nothing but up. So we finally get a good down day. So I'm going to increase my tranche size. Look at me, y'all. Look at me. Look at that. What did I do wrong? Oh, 4. No, 4. 10 1/4. I'm gonna try 10 1/4. I will not get filled, but we're gonna try it. We'll make me mad if we, dang it, I got filled. I could have got filled in the other one for 10 1/4. Should have done that in the other account. Okay, so here we go. So we did 3 tranches in the IRA, 1 tranche in the regular one. So let's go put it in, and at different prices. Oh, Bobby, you amateur, you jerk, you. All right, so let's
Hey,
go.
Bobby, can you let Matt in, please?
Yeah,
He just let me in.
Matt. I bet
Thank you,
Matt
Ed.
was. I bet Matt was griping and groaning in the Discord room. I bet he was like, "Hey, will somebody tell that fat black glass there?" Yeah, go ahead, man.
Verbatim. Exactly.
Verbatim, exactly. Will someone tell that fat, black glass wearing, whatever I am? Unbelievable. I could stay at home, get this kind of treatment. All right, 11116. Matt, how's the job going? Good.
It's fine. It's fine. 5-year plan.
5-year plan, baby.
Mhm.
Now, I've never heard you say that before. What does that mean? 5-year plan. What are you talking about?
Well, my boss is planning to retire in
Oh.
4 to 5 years. So
And then you're going to
I hope
retire
that-
too? Is that your exit plan?
no, hopefully I get his job.
Oh. What do you mean? Hopefully.
It's an elected position, so
Oh.
you got to run for it.
You're gonna be like sheriff, man.
Yeah, I mean, that's an elected position too.
Yeah. Dude, listen, you need me like as your campaign manager.
I think I'll
dude.
use my wife. She's got her master's in public relations and advertising.
Oh, well, excuse me. Yeah, use your wife, dang it. Oh, God,
From the University of Alabama.
well, there you go. That explains it. My degree from the University of Alabama was just not good enough. I got it. Hey, listen. You ain't scared me. I could be a consultant though, couldn't I?
Maybe, but you probably cost more than her.
Oh, I work for cheap.
Not as cheap as her.
Yeah. Well, let me. You think your wife is cheap? Is that what I'm hearing? Better not hear that out of your mouth.
Well, yeah.
Listen, I know Mama's expensive. Don't tell me Mama's cheap. Okay. So what are we doing here? All right, so over here we're gonna do 3 tranches. How about Matt, y'all? He's moving on up.
Well, we're moving on now. We're moving on up to the side. To a deluxe apartment in the sky.
All right, so we did 3 tranches of us. Now look at us. 111. We'll call this a 11119. Oh, I hate them when I'm on different thing. So 11119. 11119. Unbelievable. All right, so we're at the 40, 110, 40, 60, 38, 40. Put it to me, baby. 111. 44 days. I'm glad on my bigger trade though, I got a quarter extra. So 868 17 22. And we got 10 and a quarter. Just look at us, y'all, bringing in $140.52. That's going to be a really, really, really big deal. So we got our trades in. You know, we've looked at the market, but we're going fast today, baby. We're gonna be done. And y'all gonna be able to eat lunch and do whatever y'all want to the rest of the day. So now we got our new trades in. So we gotta now look at the ladies and see how everybody's doing. Let me go here and put that in 111. I want to say that was the 19th, I believe. So let's put it in 11119. Bobby, wouldn't you done better just doing 2 lots your whole? Probably. You're exactly right. But I was conservative, y'all. I was conservative in this account. Why? Because this is IRA account. I'm a conservative too. 11119. Here we go. Now let's see if we can not ring the register. All right, let's see here. Plus 66%, plus 64%, plus 76. Well, hello, ladies. 78%. Be still my 78.80. Wow, let's see what that other one was. 78 point. Well, we wouldn't even fool with this. That's a 1 lot. So let's go down to our 78.80. There you go. Even on a down day, Bobby, you can make money. I know, isn't it incredible? It's great. All right, so let's close this one. Let's just take it, y'all. 30 days to go. We know we want to start managing this thing kind of as it gets close to that 21 days, especially that naked component. So let's just take it off. Take it off, baby. Then we got to go get the naked component. We got to buy 2 of the 3420s. Y'all help me remember that. 2 of the 3420s. 2 of the 3420s. Where they at? 3420. Can y'all see my belly showing? Unbelievable. I look like Homer Simpson. Where he wears his t-shirt and it's above your belly. So 2 of the 3420s. I guess I could pull it down, but it's just so much more comfortable this way. So let's see if we can get out of this for a 250 debit. See if we can get out of this. Here we go. Come on, baby. Hit me. Hit me. Let's go to 275. We should get out of that. 275. I said we should get out at 2. Y'all see what I had to put up with day in, day in. So $3. Unbelievable. That should get us. There we go, baby. Someone is sitting at the Hamptons, hitting a button like a monkey, taking me out. All right, so we got filled on that one at $3. Which one was it? It was the 112.38. So 112.38, that's $3. 112.30. Look at there, our oldest trade. Go figure. How's that work? So we got out at $3. $3, 2088. We closed the year of our Lord 8/17/22. So we made $35.74. Come here, offer. How does Daddy do it? Day in, day out, 35.74. My clock work. Now, at some point, y'all gonna sit there and go, man, this is extremely easy, Bobby. You just do it day in, day out. But y'all see, and y'all seen this when we've, had issues, and occasionally we'll have issues. But why would you expect anything else? We have a 98% probability of success on every trade that we put on. What are y'all, I don't see what's shocking. Y'all shouldn't be shocked. We come here day in, day out, and hit the button, make the trade, make the money. Just to equal sum of all this garbage. So we can marvel in our success. From that team. And make it green, baby. $72.73. How you think Matt is keeping mama happy at home, huh? Even though she said she's kind of cheap, which I would never say about my wife. I don't know why Matt would say that. But okay, Ash says, what is the profit range you target for when you close the trade? Now, Ash, let me talk to you about and y'all know how I preach this day in day out. There's forest management and then there's trade management. I am much more about portfolio management than trade management. So that's why you'll never hear me go, I am closing everything when it gets 65% profit. By gosh, when it gets 65% profit, I'm taking it off. So I never do that. So I don't have a profit target per se on each individual trade. I look at the overall portfolio to make those decisions. So, with me putting on 3 tranches today, I'm entirely comfortable with me taking off 1 trade today. Now, yesterday we didn't take off any. And I think I had one of these trades. It's probably this one that was closer to 80% profit. So I didn't even take it yesterday. And the reason is because my theta was low, my buying power usage was low. So I was trying to build up my positions. So I put on 3 tranches today. I took off 1 tranche today. So I'm up 2 trades today. So I'm comfortable with closing. So if you really want a profit target, though, in our back test, we kind of found that, around a 65% profit was the place to take. Okay. But again, Ash, I want you to become a portfolio manager, not a trade manager. Trade management is for amateurs. Portfolio management is for professionals, right? So the amateurs look at each individual trade. The professionals look at the portfolio. And each tree is a tree in a bigger forest. So look at the forest, see what the forest dictates that you do first before you do trade management. And that's why y'all don't see me going, oh, if this trade hits a 2x stop, I'm taking it off. No, I don't do stops. I look at the forest. What does the forest need? I don't look at the individual trades. So great question. Dan, Bobby, at what level of VIX would you start considering to add some sweet Bobby hedges, buying VIX calls? Maybe when we get down into the teens, maybe 17, I'll start putting on those again. But one of the reasons that I hadn't, and let's see if I can show it. Let's see if I can pull it up. I hadn't pulled it up so long. Is we hadn't looked at our skew driver lately. So let's look at our skew driver and see what she looks like. Who knows if the spreadsheet even works anymore? Let's see. Days to expiration 9, that ain't yet. So we got to go closest to 30. So we got one right here. So our skew driver is 107. So let's go to the trend on skew driver. Hadn't logged it in a while. We'll log it. 107. So I'm waiting for skew to come down. So today is 8/17/22. And we said this. So the skew is coming down, right? So here's where I want to be hedging is when skew. See this? See, skew is so elevated, y'all. It's still elevated. Look at all this. It's elevated. Now, this is me. I personally don't think we have much outlier, what do they call it? Left side black swan risk as long as our skew is so elevated. Skew normally with the skew drivers between, this 25 and 35 levels. See this right here? This is where you have outlier risk. When this skew is so elevated, in my opinion, I'm looking for this to normalize somewhat before I start. And I don't look at it because I know, hey, man, we're in an elevated skew environment. So I don't really look at putting those on. Now, am I right? Am I wrong? I mean, what could we have an outlier event today? Yeah, we could, but I'm just not planning on it. Yeah, Dan, you're not familiar with skew driver. Skew driver basically looks at a 20-point wide SPX spread and says, pick the one where the price is at about $5.20. So you see this one right here is going for 5.10. So this is about, here it is, 5.2 is about 106, 107. That is the distance away from the current spot price of SPX. So that spread is way, way, way out. So when that $5.20 20-point wide spread gets much closer to the money, that's when I believe that we have risk. And don't I have a class on the screwdriver? Does anybody know? Can I do something on a screwdriver? Or maybe I need to do something on a screwdriver. And I'm happy to say this is not my invention. Now, the spreadsheet is something that one of our guys put together that really, really was helpful. But this was something taught by Scott Rubel, J.L. Lord, Stratagem Trade. So it's his baby. And he just noticed, because he does a lot of these 20-point wide trades in SPX. So he does a lot of them. And he was just noticing, he's always noticing about, he'll do one about where it's at a price of $5.20. And he started noticing, hey, wait a minute, sometimes that gets way, way, way out of the money. So if it gets way, way out of the money, you expect it to normalize, which would mean what? That the market would be going upward. Now, when this gets really low and it's like 10 from the money, oh, y'all, it will normalize, and it'll normalize it by seeing a big drop in the market. So right now we're looking for sunny days to get this back to normal, which would be between 25, 35 points out of the money. Right now it's 107 points. So I don't know if I did a good job of that or not, but it is what it is. So this is why we haven't been looking at it every day. We're in an elevated environment. This actually was the predictor of the bear market that we are in, and I just didn't see it. I didn't see it because I was like, what the crap is going on? This isn't right. It's not right to be elevated so much, and we're still elevated. But it does look like we're coming down. And as we come down, 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 and get closer to this 25, 35, then I'm definitely looking to put on hedges. And we'll do that together. Good. Now, what will we do? All right, so we got this thing. So let's go to the other account. We got us a closed trade. So let's go look at our other ones. Other ones? What do you mean other ones, Bob? You got to change to this account. Well. Negative 99%. Remember, that's not exactly right, because that's just put debit spread that we apparently are going to let just expire worthless and do nothing with, unless we have a big crash. And then this would serve as some sort of insurance for us. So 41%, 57%, 13%, 3%, 62%. Well, hello there, cutie pie. How are you? Let's go to this one. 52%, 63%, 62. This one's at $37. This one's at $41. And I'm more likely to close one in this because I just need to take off risk, y'all. And take off risk, put on risk, take off risk, put on risk. So we're not going to make a lot on this one. We'll make a little bit. We'll make some Burger King money. I can take mom and the kids to get some $1, 10 chicken nuggets for $1. Oh, by the way, did y'all see that Applebee's is offering 12 shrimp for $1 with any steak entree? Now, y'all, if that ain't a deal, how can Applebee's do that? All right, so 2 of the 34 60s I gotta buy. Hold on, let me just think about that for a minute. So that's 12 shrimp. You can get a dozen, or is it 10 shrimp? Oh, that's gonna drive me crazy. Y'all give me a second. Applebee shrimp, people. Applebee's shrimp deal for $1. Applebee's. For now through October 1st, you can add a dozen double crunch shrimp. Y'all, it ain't even single crunch. They got the double crunch shrimp for just $1 with the purchase of any state entree at participation locations. Look at that. Unbelievable. Let's see if I got a good picture of it. Man. Where's a picture of my shrimp? Anyway, y'all getting me distracted thinking about that. What was I thinking? Oh yeah, we got about 2 of the 3460s at 44 days out. 2 of the 3460s, 44 days out. Here we go. 2 of the 3460s. The thing is, though, I like the Fiesta Lime chicken. So that's not a steak entree, but I'm very convincing sometimes. I'll look at the little server and I'll go,
Hey, Bobby,
yes.
hold on a sec. You asked us to remind you yesterday about entering the trade separately.
Oh, way to go, Ed. Way to go. Okay, we'll do it. I'll do another one and we'll do it.
Yeah, we rats have to stick together, right?
Yes, we do. Hit the button, monkey. All right, what am I doing here? 475 to get out of this. Oh, that stinks, but we'll do it. Come on, let's get out. 475, baby, get me in. There we go. Yeah, it brought up something. And see, that's why we're family. We gotta do this. So 112.38, we got out for 475. 112.48, 475. 112. Is it 48? Oh. 112.38 for 475. 112.38. What? 1112. Here's my 11. I already got out of the 38. Hold on, that ain't right.
I think it was the 44, Bobby.
Oh, 44. Thank you, Rick. See, how would I do this without y'all? All right, 112 for 44 for 475. Unbelievable. All right, here we go. 475. Thanks, Rick. So Daddy made some McDonald's money. $29.49. Talk to me, baby. $29.49. Rolling in the money. So let's go get a profit calendar. $29.49. Let's put it in there. $29.49. Yeah, I know. There's people gonna watch this on YouTube. They're gonna laugh and they're gonna go, "Can you believe this fat black glass wearing some gun is so excited about making $29?" That's fine, pal. It adds up. It do add up. You make fun of me on YouTube. All right. So here we go. So we made $90.16. And to go for 21%, we know that all I got to do is make $105 a week. So we are overperforming. Why? Because we are good. All right. So now, as Ed said, Ed says, "Hey, Bob, you got to do what you said yesterday. What you said yesterday is that you were going to do a split. So, and a split is this, right? Where I'm going to manage them separately, y'all. I'm going to manage the naked put separately from the put debit spread. So let's build this one. Let us build this one. So let's do it over. Why would you sign me out in front of all my friends and family? In case my mama is watching, which I'm pretty sure she's not. I got mama working. She's 77 years old, and I got her working because I don't need her to. Now, this is going to be interesting, y'all, because where am I going to be able to put this thing? I mean, that's the problem, because I got all these. See, Ed, if you come up with me earlier, maybe let's see. Here we go. Let's just do it. Let's trade, MES, table. So we're going to try to do something in 44, right? So I'm gonna do a long put vertical. Well, Bobby, why don't you just do it where you, now why would it not let me, why is my button not working? Crap. Oh, this is really embarrassing. Oh, wait a minute, what's that? Oh, it said the sky already got one built. All right, here we go, long put vertical. Mama said there'd be days like this, mama said. Now let's see what we can go down. Well, that's weird. Look how it's showing my positions now. Huh. Let's see what we'll do if we go down to 4100.
Hey, Bobby, got a question.
Yes. Hey,
So I'm trying to tell some friends about this, 111 and 112s and whatever.
they won't believe you.
Well, trying to get them to buy in. But what do you think the minimum account size you can start with doing this? I know to put one short micro on is like $1,600, or it's less than 1,000 to have one naked put. So would you say 2,000, 3,000 and put one on until you get another
Yeah,
one on a month?
I mean, if you want to try it out, I think you got to at least have 2,000, not to start
Yeah.
to have
I just voted for 3,000 per tranche.
Yeah, I think I kind of agree with you, Ed.
yeah. And maybe somebody in here is trading this, in a smaller account. Nobody be embarrassed about any account size. Is anybody doing this in a smaller account that you could share and say, yeah, I'm running this in a $4,000 or $5,000 account? Anybody? No.
There
And
are
again-
some that are doing it with that level, Bobby, and I don't really blame them for not wanting to chime in. But,
Yeah.
As you say often, the smaller the account, the higher you have to let your buying power trend sometimes. So I think, Matt, I think it's Matt talking. For your friend, I mean, I would explain to them this is extreme risk capital, even though it's super high probability of profit, yada, yada, yada. You don't, people shouldn't get into it with the idea it's a money machine necessarily. And particularly with a smaller account, if we get a medium-sized pullback at any point in time, they have to
You got to be
realize,
super selective about when you put it on.
yeah. And then the other thing is, as I always preach, I would do like one, depending on their size, do one a week, or do one every 2 weeks, or do one a month. Just do some
I
kind of
think
frequency.
with that size, it would have to be one a month.
Uh-huh. Mhm.
And if they're just getting started, I would say, I'm not a big fan of paper trading, but I would imagine, Matt, some of these people you're talking to are not even traders at all, right?
Correct. They're starting to watch the market.
So what I think I would do is say, paper trade it a little bit, even though I'm not a big fan of paper trade, learn how to hit the buttons, right? Learn how it feels, learn about how much buying power it takes, and try to just paper trade the strategy for a couple months before they actually hit the button. Brian said it'd be tough to get any kind of forest with less than 10,000. Yeah, to be able to do like we do, because if you got 2,000 in your account, well, you're going to immediately go above any recommendation that we use for buying power. So, you got probably 10,000 before you. Okay, so Brian says he's been testing 10,000 before looking to roll it into 100,000. Wouldn't following the trade entry checklist scale up and down the net leg, be it once, day, week, month, etc. Yeah, you gotta, you gotta amend it, right? You can't do it every day. You gotta amend your checklist, like, well, you don't really have to amend your checklist. You just gotta say, can my account sustain a trade today? Yeah, go through the checklist, go through the forest. Naveed says I have one with $2,500 account, 111 max, 2 book size. So $600 to $1,000 per trade, but keeps $1,200 buying power in case of span margin. Okay, good. All right, y'all, because I don't want to overlap trades, y'all know my hesitance to do that. I'm gonna have to
Just
pay a
do
little-
it, Bobby.
I'm
Just
just gonna-
overlap it.
I'm gonna hit the button, baby. We're gonna pay $11.75 for this.
No, keep going down and go to $10 and overlap two of these bad boys. Come on.
But it messes up my Thinkorswim account. It's not so much this account that's gonna mess it up. It's gonna be my other account. And then here's Ed, when I do that, here's what happens, is I get this bad boy. And this bad boy looks bad. I don't want a 1/1/16 where I go, now wait a minute, where's my naked put? Because invariably when I close it, it's gonna take it from one group and put it in another group, and it just messes with me. And my what is HD, OHD? I'm just gonna hit the button again. Since when will I listen to what Ed tells me to do? Right? Oh my gosh, now it's gonna punish me and say, Bobby, you should have listened to Ed. And I was like, no, man. Ed's the reason I smell like a peppermint patty every time I go into the store. People are like, what is that? You smell like your mama. Jeez, please. All right, so let's put that one in. All right, let's do this first. So I'm gonna show you how this works. So I just put in a trade. I put in a put debit spread. Now, that in and of itself is what we call a hedge, right? So let's put that into the spreadsheet over here, and then we'll make a decision on what we're gonna do. So I just put in a little hedge trade. So we'll go over here and we pray this works, especially since I rolled this out. So the micro, we got number tranche 1, right? And I'm going to call this, let's see, do I want to do a 112 or 111? Let me think. Give me a second. I'm gonna call this a 11111. Okay, I'm gonna call this something. Ed calls them stretch or whatever. I'm gonna do mine different than him. This is what I'm gonna do. I'm gonna call this a 111 hedge 1. And this is gonna be the 4150, 4100. Puts. Ah, geez, Louise, I ain't got nothing for it to know here. So I gotta check puts. Next time I put a P, it'll work. All right, strategy. Strategy is, this is a debit spread at 44 days. Please work. Enter on 8/17, year of our Lord 22. And the price was, well, I hadn't put it in on this one yet. Price was filled at 12. Let's see if we can get filled over here in this. So that was a debit of 62.94. So let's try it over here. Make sure I'm putting this right. Trade. This is exciting though, isn't it? So I just did the 4150, 4100. This is exciting. 4150. So we're gonna buy that one. Hold your control key down. 4150, 4100. So this is an insurance policy. And we'll put it in for 1175. We won't get filled. Will we? Or will we? Will we? It's like going to Waswell, Georgia. So we gotta
Why don't
make
you let that one sit for a minute and go do your naked put in the Tasty account?
No, Ed, because I don't like working orders. I got in for $12. No, Ed. Unbelievable. Ed and his working order. Look, Ed, here's what Ed does. Ed will put an order in, he'll let it work for 3 days. He's got the patience of Job. I do not. I gotta get this thing done. I got stuff to do. All right, so I've got my hedge in. I got my hedge in. It cost me $62.94. All right, so now what we're gonna do is I'm gonna sell something naked, baby. Let's go find it. And I think I'm gonna do a 111. I think I'm gonna do a 11111. So I'm gonna sell another naked put. So where am I gonna go? I'm gonna go in that same 44 days. So I know I just paid $12. So I kind of want to do something. I don't know, man. I may do a 112 here. So I kind of want to sell something that I can double. Now, Ed would not do this. Here's what Ed would do. Ed, tell him about your stretch. You would probably do something that would be like a break even, right? So you would probably say, if I paid $12 for that, I'm going to sell something that, I'm going to take in about $12. So if he was doing a 112, he could do 2 that he could sell for $6.
Well, we should have a separate session on that. Don't do a stretch. Don't do a stretch right now. Let's do a separate session on that. We can get all kind of feedback on it.
Yeah, we can do that. So what I'm thinking about doing is doing something that will mostly cover that. So I'd kind of like to do something that where if I were to get 50% profit on it, it would buy it. So here, so if I pay $12 for it, I could do this, sell this 24. The only problem is I already short one on that thing. So I think I may do a 112. Let me see if I can find one that I could do something around 12 or so. Look at this. Yeah, I think this is what I'm gonna do. So I'm gonna do it around here. I'm gonna do this 3720. I'm gonna turn it into 112, and I'm gonna do this as 2, do quantity 2. And I'm gonna move up to about, everybody's saying I'm gonna try to get that mid price, right, of 13. So that give me $26. I paid $12. I'm getting $26 for this. Let's just try that real quick. And then I'll try to show you how I'm going to manage this trade and what my goal is. Working, let's make it less advantageous for me. So 1275. Come on, fill me, baby. Fill me, baby. So we'll go down to 12. Oh, look at us. Sweet Bobby, you beast, you. So we got filled for 1274. 2 of those. Let me go do 2 of these over here. Bobby, you are a thing of genius. Real man of genius. So I'm gonna call this 112 hedge 1. How come there? 112 hedge 1. All right, now I'm gonna go give me S. Number of tranches. Now this is gonna be 2, right? Because I sold 2 of those. And I'm gonna call this the same thing. 1, 2, hedge 1. And I sold the 3720 put. And this is going to be, look at this. Put 44 days. 8/17/22. And on that one, I got filled for 1275. Let's see what we get filled for here. 1275. So here's what we want to do. Look over here. Hope y'all ain't getting confused like I am. Have I already done the spread over here? I did, didn't I? I did the spread over here. So now I got to do 2 of the 3720s. Way down here, baby. There you go. 2 of them. 2 of them. And we're going to try it for 1275. I said we're going to try them for 12. I'm going to look at that. I have Ed's patience, y'all. Ed's patience got me through. All right, so let's go back. I'm still not convinced that I put in the, oh, no. Yeah, so I did the spread for 12. I did that for 1275. So would everybody agree with me that once these 2 get to 50%, I could leave this little puppy on for the entire 44 days as a hedge, as a free hedge, as long as I make 50% profit on this. Everybody agree with me on that? So that's my goal. Now, there's also other things that we can do. So say the market jets back up and I make my 50% profit on this really, really quickly. And say that I've still got 30 days left. Maybe after 14 days or so, I make 50% profit on the naked component. You know what I could do? I could sell an additional 1 or 2 naked puts against a remaining debit spread. So do you see the allure that some of you have in wanting to manage these things separate? So what I'm going to do to let me know that these things are kind of together, here's what I'm going to do. Now you don't got to do this because I've got them named the same thing, right? But I'm just going to kind of go this. Now, what does that mean? That means that these 2 things are together, right? I'm kind of managing them separate, but they go together. So I've got a cool little color coding that lets me know in my head. And I'm kind of thinking that when this gets to 50% profit, I'll have on free hedge. And at that point, I can use this hedge to sell an additional put, or I can just leave the hedge on for the remaining 44 days and hope that if we get a big down move, then I can close that for a nice little profit inside that profit ticket. All right. So let's go put him in this little name, 112 hedge 1. 112 hedge one. So let's go to the unallocated 112 hedge one. Ed, I didn't mean to yell at you like I yelled at my kids.
No. Always fun and games. No worries at all. You know,
Ed!
the only, I'm kind of wanting to chime in. I want to make sure people understand, because this is something you and I have discussed. You're actually putting this trade on initially with the idea of turning it into a hedge when the put debit spread is paid for. It's not an after the fact thing, which it can also be if your plan allows it, but you are deliberately on entry planning this thing not to be a normal trade.
Yeah, this is not a normal trade. The full intent of this trade is to use that put debit spread as a hedge and to finance it by the sale of these two naked components. So what I'm looking for, you see I'm down negatives, I'll be looking at this one and managing it by looking at not the overall P&L, right, of the trade. I will be looking at the P&L of the naked component. When this is at 50%, I'll know that this will be a fully paid for hedge that I can let go as long as we want to into expiration if necessary.
And then Bobby, if people are doing that, relabel it, or you could leave it because you have it called a hedge. I'll relabel mine, put PDS only, because once you take that naked put or the two naked puts off and you know it's paid for, it starts generating a loss. Your P&L is going to show a loss because the put debit spread's down money. So once you remove,
this one, y'all, this is just
exactly.
put debit spread, and you start saying, man, that's terrible. That's lost 98%. No, because I've closed the other one for, over 50% profit. So I can't lose money on this.
And see, so that would be one I'd change the name instead of 11160, whatever you have, whatever it's called. I would change that to blah, 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 put debit spread. Not that one, but the one you just showed us where you were down.
And the only reason I hadn't named that one is because I don't know how it happened, to be honest with you. And I don't really know how I'm going to account for it other than, I don't know, I got to go back and do it or just let it expire and go, oops, we missed that one, which is probably what I'll do. Now, I'll tell you my verbiage, y'all, for what I'll call this one. Once we let this one, let the profit run to 50%, I will call this 112 hedge one after harvest. Is what I'll do, AH or after harvest. What I call it is I will have harvested, and I guess that's from Bertino's class, right? He always used the word harvest. And so I will harvest this naked components to pay for this. So I will call this a 112 hedge one AH or after harvest. So whatever your verbiage is, for controlling things, for labeling things, that's good. Are any questions about that? I thought that's a good thing. And Ed, thanks for bringing it up because I wanted to do this. I've been wanting to do this for a while to show y'all how you can manage these things separately. So this is kind of a 112 hedge. And as soon as we're doing a new trade and I put it on my YouTube video, this will get double the amount of views as the other ones. Because people are like, oh, new trade. Oh, wow. We're going to trade something new. It's really the same trade. It's just, it has a different purpose.
And Bobby, one more chime in. I'm starting to enter all my trades into this tab because whether they're a hedge or not, I want them to go in separately because I'm going to leave my put debit spreads on when I take off the naked portion, the naked put portion. So it doesn't have to just be for these specialty trades, we'll call them, if you will. You can enter all of your trades right here and give yourself that same flexibility, whether you have the intent of taking off the naked put by itself or not. It makes it easier to do down the road if you want to.
Yeah, rather than having to, figure out what did I do pay for the.
Yeah, because when I'm exiting now, I'm entering them in the ones I entered all in one trade in the micro tab. I'm just entering the exit price when I sell the naked put. So there's some funky mechanics, there's some funky accounting going on there that I'm not worrying about adjusting. But all that would be taken care of if all the trades were just entered into the NP and spreadsheet.
And I would recommend y'all, when you're doing this, and of course, when you close it and it's profitable, make it green. Then you go, well, Bobby, what if I lose on this one and I've gained on that one? Well, I would make them still, probably both green because they were, together, right? I mean, I don't want to clog up my red. If the overall trade is profitable, I'll probably cover on both. I don't know, whatever you want to do. But color coding, look how easy it is. It's color coding is just, and they got a million colors, right? I mean, you can do all different kind of colors. So you can, keep these things and easily know what goes together and what doesn't go together.
And I would make them both, I'd make them both green or both red, depending on how the whole batch went.
All right, Dan's got a question for you, Ed. Ed, are you looking to close the naked put just to cover the cost of the PDS, or are you looking to make a profit on the naked put before you close it?
I'm looking at making a profit on the naked put, the normal profit, the 65% plus profit. Unless I'm putting on what we call a stretched 111, which you've referred to, Bobby, and other people call it other things. This is one of these things I've operated in a vacuum, so I kind of came up with this. It's a put debit spread and a naked put where you stretch the naked put and bring in like a quarter point, just enough to like pay for the commission or not even. And it's stretched way out, and then and it's a 111. So when that thing decays by half, because you're buying the put debit spread for 10 and you're selling the naked put for 20, when the naked put deteriorates, decays to $10, you've paid the $10 for the put debit spread. So you take the naked put off, leaving the paid for put debit spread.
Larry says, Bobby, when entering a new naked put after closing one, what will the buying power effect be using the same PDS? Well, I mean, depends if I do one or two or where I put it, but it should be, probably close to the same. I hadn't done it, but so let's say that it's let's just pretend that this is a 44-day trade, right? And that it's made 50% profit. So, and let's say it's done it after 14 days. So then we'd be putting one on in the 30-day period, right? I probably match it. Now, Ed does some calendarized things where he puts his naked put at different places. I'd probably leave mine in the same, expiration. And
I like the same. I like the same unless there's just not enough DTE. Like yesterday, I did one. I think there were 31 days left, and I'm selling an SPY naked put under a different spread, not an SPY spread, but I'm calendarizing it because I don't really care if I get put the SPY. So it's kind of different. In this case, where you're doing a pure recycle, I call it a recycling. You're recycling the put debit spread because you're using it more than once without paying anything. So it's a recycle. And sometimes you have to get that second round or even the third round of naked put under the put debit spread closer than you otherwise would have on the initial, closer like a higher strike. And I don't want to confuse the people to death, but it's kind of a subjective thing. And as far as the margin, like I've been taking off 112s, I've been taking off the 2-part, and then I'll roll in a single naked put underneath it. So I'm cutting my buying power down because I'm taking 2 off and putting 1 on. And then the other thing I found is when you, depending on your strike and depending on your maturity, when you bump it out from a 30 to a 45 day, they're going to want more margin for the 45 day. And I might be overgeneralizing that, but the longer the time, the more margin I've been seeing on my trades. So I don't know. Just want to throw that out there.
Let me give an example of what I'm talking about. I closed at ES the other day at about 80% profit on the naked put, and I went ahead and entered a new one, but I wasn't real sure since put debit spread has lost value, and it was, I think, same as you had 31 days. I wasn't real sure just what the effect was on my buying power. I couldn't really equate how to calculate that compared to the original trade.
If you took off 2 and put on 1, it's going to be less overall buying power.
No, I think I rolled 2. I think I'd have to look it up, but I think I still have 2 naked puts against that put debit spread. But to me, if you have a market like we've had recently where you're able to close those naked puts quickly, it makes sense to be able to roll into a new one without entering a new, closing everything out and entering a new put debit spread.
To me, it's 100% logical. And if people are kind of dazed and confused, when you exit you're looking at exiting year one or you're exiting year two naked puts, just set up a new 111 or 112 and look at it and look where your put debit spread is on the new one and look at your DTE. And if it's comparable, that trade is a candidate to just roll in the naked put portion and leave the put debit spread as your protection. The other factor is I do more and more of these where I'm taking off the naked put, leaving a put debit spread, leaving a put debit spread, leaving a put debit spread. I got a bunch of put debit spreads out there that are able to support the whole forest. If I put on like a naked put here, a naked put there by itself, all these put debit spreads are unmarried to anything. So I'm just kind of throwing in a little risk under there, knowing implicitly that there's some put debit spread protection there, even though it might not be exactly matched up with this new naked put that I'm putting on.
Yeah, and you're just building your little, your little whale. Just building that little puppy up stronger and stronger and stronger. It's a great plan. And by the way, Larry, can I say something to you, dude? I'm gonna need you to talk more and more often because, and I hope you don't take this the wrong way, but I love your voice. Has anyone ever told you, Larry, you kind of sound like Hank Hill from King of the Hill?
I'm sorry, who's that?
Hank Hill from King of the Hill. Y'all remember the cartoon King of the Hill? His son's name was Bobby, his wife was Peggy. Dude, he sell propane. Dude, you sound a lot like him. I love it.
I've been told a lot of things. I think that's a new one.
I love your voice, though. I love it. All right, guys, great session today. Thanks for all the participation. I will see y'all tomorrow.